What if I told you there's a little-known IRS loophole that could legally slash your 2026 tax bill by up to $8,000? Money that's rightfully yours, but most Americans never claim. You're about to see exactly how to set this up for yourself. No fancy tax attorney required. This video contains affiliate links. I may earn a referral fee at no extra cost to you because these are the best tools in the industry. Stay with me because by the end of this video, you'll not only understand how this loophole works, but also know the exact steps to leverage it, whether you're a business owner, investor, or just someone tired of leaving money on the table. Now let's get real. 2026 is shaping up to be a challenging year for taxpayers. The IRS is tightening compliance, audits are up, and most people are overpaying by thousands simply because they don't know what's legally available to them. Here's the crazy part. For years, tax professionals have been quietly using a specific deduction strategy to save their clients big, not just the rich, but everyday business owners like you. Yet most people skip it out of fear, confusion, or simply not knowing where to start. Here's what most people do. They scramble at tax time, miss key deductions, and hope their software catches everything. But what you should do is plan ahead, leverage proven IRS guidelines, and structure your finances smartly. That's why this video matters now. The window for maximizing this loophole closes fast as new regulations creep in each year. My angle? I'll break down exactly how this deduction works, the real situations where it saves you the most, and how to implement it step by step, backed by real client stories. No vague advice or complicated legal jargon here, just actionable moves that put cash back in your pocket. Before we dive into the steps, forming your LLC doesn't have to be complicated or expensive. Bizzy handles everything for you: registered agent, formation documents, EN, compliance alerts, starting at $0 plus state fees. Link is in the description. Now, let's get into how the loophole actually works. What is the $8,000 IRS loophole? Let's jump straight into what you came for, the loophole itself. This strategy is all about maximizing the Section 179 deduction. Most business owners think depreciation is slow and boring, but with Section 179, you can deduct the full purchase price of qualifying equipment, software, and even some vehicles in the year you buy them. That could mean an immediate write-off of up to $1,160,000 for 2026. But here's the kicker. Used equipment and off-the-shelf software qualify too. Why most people miss out? So many business owners think only new businesses or giant corporations get big deductions. Not true. If you run your business as an LLC, S-Corp, or sole proprietorship and buy qualifying assets, this loophole applies. You just need to know the limits, eligible purchases, and don't leave out bonus depreciation, which covers assets not eligible for Section 179. Let me break it down simply. Number 1. Any business asset, think computers, machinery, vehicles, can usually be 100% written off if it's put into service this year. That's where the savings come in. Number 2. You have to elect Section 179 on your tax return. This isn't automatic. A shocking number of business owners never check the right box. I had a client who saved $8,200 on a single equipment purchase just by using this strategy for the first time. Stick with me here, because the next part could mean the difference between saving nothing and saving thousands. All right, here's exactly how you put this into action, step by step, no guesswork. Step 1. Verify your business eligibility. If you have an LLC, S-Corp, partnership, or even a sole proprietorship and actively purchase qualifying business equipment or software, you're in. Assets must be used more than 50% for business. This applies if you're a consultant, Airbnb owner, e-commerce seller, basically anyone making legitimate business purchases. Mistake to avoid: personally buying assets and forgetting to document business usage. Always title purchases to the business and keep receipts. Now, here's what most people forget. Step 2. Identify qualifying purchases for 2026. Think computers, office furniture, business vehicles, over 6,000 lbs, manufacturing equipment, even off-the-shelf software. Did you buy a new van for your mobile business? That could qualify. Pro tip: If you need new equipment, buying before December 31st, 2026 lets you claim the deduction for this tax year. Don't wait until the last minute. The asset must be in service, not just ordered. Step 3. Complete IRS Form 4562 correctly. This is the form where Section 179 gets real. You'll itemize the asset, enter the purchase price, specify the placed in service date, and elect Section 179. I've seen too many people skip this step or get afraid of filling out the form. Use reputable tax software. This is where Doula comes in. They handle IRS Form 4562, maximize your write-off, and keep your books audit ready. By the way, for full turnkey support, bookkeeping, tax filing, deduction maximization, I recommend Doula. They saved me $4,000 last year alone. Link below. Step 4. Bonus depreciation if you exceed Section 179 limits. If your purchases go over the annual limit, $1,160,000 in 2026, bonus depreciation kicks in. This lets you deduct 60%, phased down from 100% in 2023, of the additional asset cost. Perfect for rapidly growing businesses or large investments. Claim this after Section 179 on Form 4562. Planning a big purchase before year's end? Let me know what you're considering. Your comment might inspire someone else. Step 5. Audit-proof your deduction. Keep clear records, purchase receipts, proof of business use, and a record of placed-in-service dates. If you're ever questioned, these documents close the case. No stress. Let's tackle the biggest questions, because I know you have got doubts and I have heard it all. Q1. Is Section 179 right for me if I'm not a huge company? Absolutely. This deduction is designed for small and mid-sized businesses, solopreneurs, real estate investors, freelancers, even side hustlers. As long as you're making legit business purchases and filing a business tax return, you're eligible. Q2. Can I do this myself without a CPA? Yes, with the right tools. Quality tax software or an all-in-one provider like Doula can walk you through Form 4562 and help avoid mistakes. But if you're planning to deduct $50,000 plus in assets or have a complex business, consulting a professional pays for itself. Q3. What if I'm late or miss a year? Section 179. Only applies to equipment placed in service during the tax year. If you bought something in January but never used it until 2027, you'll have to claim it then. There are no do-overs, so know your deadlines. Q4. Will this trigger an audit? No more than any other legit deduction, as long as your records are clean. The real audit risks are unsubstantiated claims or mixing personal assets. Good record keeping and a paper trail are your defense. So today, we covered the Section 179 loophole, why most people overpay, how you can legally save up to $8,000 or more, and the exact step-by-step process to claim every dollar you're owed on your 2026 taxes. Your action step right now. Review your 2026 business purchases, pull up Form 4562, and check if you're leaving money with the IRS. The sooner you act, the bigger your deduction, and the less stress comes with tax season. Don't let another year go by missing out on cash that's rightfully yours. If you found this breakdown valuable, hit that subscribe button and tap the bell for more ways to grow your wealth and cut your taxes. Drop your questions below. I read every single comment and I want to know your story. And remember, if you need real help with LLC formation, compliance, or year-round tax filing, BZ can handle your LLC setup for $0 plus state fees, and Doula will keep your books airtight. Both links are in the description. Stop leaving money on the table. Thanks for watching. Stay committed to building your financial future, and I'll catch you in the next one.